Hello, everybody. This is Brian Perry here with Perry Home Solutions of South Florida, selling real estate for a very long time. And I'm here with the lovely and fabulous
Julie Perry.
Julie Perry.
Yep.
And we have a person who shall remain nameless behind the camera. Hello, nameless person.
Say hello, nameless.
Okay, so we are gathered here today to celebrate real estate. And Julie has some questions from our lovely group of question-asking friends and past clients and so on and so forth. And so, Julie, why don't you let us know
The topic of the day?
The topic, yeah. Or is it just one topic?
Well, I guess we'll find out.
Okay.
I'll keep you
Fair
guessing.
enough. Well, I feel like by saying topic singular, you've already telegraphed.
Is that so?
Yeah, I think so. All
We'll
right.
see. Okay. So right now we're going to talk about when we talk with people that are considering selling their home. Of course, one of the first and many questions that they want to know is how much money will I net? What could be my potential closing cost in the selling of my property?
Right.
So I thought we could
That's
go into a
definitely a
little
big
more detail on that. So what are some of the costs that are associated with selling a home that someone should be aware of?
You got a nice list there.
I do.
Okay.
This is my cheat sheet. You're supposed to.
I'm supposed to know this off the top of my head?
Yeah.
All right. Okay.
And you want me to give you a little cue?
So, okay, there's the basic closing costs that are going to be associated with the seller. It does vary a little bit from county to county here in Florida, and we do serve more than one county on with a lot of frequency. However, we happen to be sitting in Palm Beach County right now, so I guess we'll just talk about Palm Beach County.
Yeah.
So in Palm Beach County, you have documentary stamp taxes that you have to pay at closing.
Mm-hmm.
That is a tax charged by our great state of Florida, and it's charged on every sale. And you want me to give you the calculation, so in case people care to know?
I don't know. Too much on the.
Well, it's so to calculate documentary stamp tax, you divide the purchase price by 100, and then you multiply by 0.7, and that will tell you what your documentary stamp taxes will be. It should match up perfectly on the listing statement. Then there is title insurance, and that's the one that can vary a little bit from county to county.
Right. Depends on which county you are. Sometimes a buyer expense, and sometimes it's a seller expense.
Right. And so, yeah. I can't remember what I was going to say.
Title insurance, owner's policy.
Title insurance, okay. In Palm Beach County, it's paid for by the seller, as I was saying, and it's calculated on the purchase price also. It's state regulated. It's called the promulgated rate, I believe.
Yep.
And so the title company is not allowed to charge you anything other than the specified state regulated amount. And the calculation for that is fun.
Mm-hmm.
That is $5.75 per $1,000 up to the first $100,000. Mm-hmm. And then it is $5 per $1,000 every $1,000 after the first $100,000. So have fun with that one.
Okay.
And then there will be some charge. Okay, so in Palm Beach County, right, it varies by county who pays, as Julie said. And in Palm Beach County, the seller typically pays. And in that case, when the seller pays, usually the seller selects the title company. Mm-hmm. And so there's some value in that strategically. You know, if you're paying the fee, you get to kind of choose who you'd like. And that title company will charge you fees beyond the promulgated rate.
Settlement fees.
Yeah, settlement fees. And so those can vary from company to company. So that's something you always want to kind of be aware of. Mm-hmm. And then, of course, there's the most necessary and important fee, which is the real estate commission, obviously. And remember, real estate commission commonly is split between the listing broker and the buyer broker. You know, sometimes the listing broker is also the buyer broker, but oftentimes it will be a separate real estate brokerage who may represent that buyer. So keep that in mind. Mm-hmm. And those are like the major closing costs.
Right. Now, some other expenses. Expenses, we can call it. Things to consider will be the payoff of your mortgage, if you have a mortgage, of course. And something that comes up often is why is the amount of the settlement statement different than what I got from my last lender's statement. You want to explain that a little bit?
I didn't understand your statement.
Like sometimes as a seller, you get your statement from your mortgage company.
You pay off on your mortgage?
Yes.
Oh,
and it says your principal balance is X. And then the actual payoff amount, it varies a little bit from that. So just like a side note, like,
Well, I'm kind of curious. Why is that?
well, I've heard it explained to me, and I'm not.
Maybe we should get that person on the video.
Yeah, we should get the title person here. So I'm not a closer, right?
You're not supposed to bring up stuff that we don't know.
I've heard it explained that it's because you skip a mortgage payment at the beginning. You know, when you first get a mortgage, you don't pay for that first month.
Oh, yeah?
That apparently that just goes towards the
Okay.
back end.
Fair enough.
And then there's like extra fees, of course, that they tackle at the end. So that's what your amount will be a little bit different. So just something to consider when you're looking at your statement. The principal balance that you see there will be a little bit different than what your actual payoff is at closing.
Okay.
Okay.
Fair enough.
How about taxes and prorated taxes?
Yeah, so taxes are very important. So when I help a seller sell a house, one of the first things I generally will do for them is I will prepare an expense sheet. We call it a net sheet.
Mm-hmm.
And it basically outlines all of the expenses that they will incur, and we covered most of those right here. But I always make a disclaimer that your taxes in Florida are paid in arrears, which means they're paid at the end of the year.
Mm-hmm.
So in other words, we're in 2023 right now, and we're in August at this moment. And so whomever is listening to this that does not live in, or that lives in Florida and owns a home, has not paid your real estate taxes yet.
Right.
Right? Now you may have escrowed them with your mortgage company or whatever, but they haven't actually been paid because the bill doesn't come out until
November 1st.
November. So those taxes get prorated, and so whenever you close in the year, it's going to vary as to how much taxes you'll owe. But you're going to owe from January 1 until the closing date, and then you'll have to. The buyer will actually give you a credit at closing for the remainder.
You give the credit. You give the buyer.
You
credit,
give
right.
You give the buyer the money for the taxes that you owe, right?
Because when the bill comes out, assuming you close before November 1st, then the buyer's the one that will get the bill and they have to pay it. So you're crediting the buyer.
So we can always calculate closing expenses relatively accurately, but we can't really calculate taxes very accurately. But those aren't. I mean, they are a fee paid at closing.
It's just a closing cost, a
Well,
closing expense.
it's not.
Well,
My whole point was it's not a closing expense because you would pay if you didn't sell your
But you
house,
owe
you'd
it
still pay
anyway,
the taxes. You owe taxes because you own the house. It has nothing to do with selling the house.
Right.
As a matter of fact, you're paying less taxes if you closed in August right now
This will
because
be-
you'd only pay up through the first 8 months.
Right.
And so it is tabulated at closing because you have to rectify it at closing. However, it's not really technically a closing cost. It's just your normal
Right.
cost of owning the home.
Just for someone trying to determine, well, how much would I net?
Yeah.
That's something you have to consider, right?
Yeah.
What else have we discussed?
There's also homeowners associations.
stopple fees.
Well, I wasn't saying that first, but yeah, there's estoppel fees. That's a fee charged by the homeowners association, and it's basically just a revenue generating fee that they charge to answer questions so that you can close the file. Because when you own a home in a homeowners association, they have to have a document from the HOA
The
saying,
title company.
yeah, the title company saying that it's all good.
Right.
And-
They want to know that you're in good standing, that you have any past dues, do you have no violations and
Yeah.
stuff like that.
So they charge a fee for that, and that fee can range anywhere from $0 to like a few $100 usually. Have we seen it more than like $500? What's the average? Like 200-300?
Maybe like 300, 350.
Something like that. So anyway,
Yeah.
there's that. And then there's also your maintenance fees, your regular, ongoing, regular fees that you pay, and those are often paid monthly or quarterly.
Yeah.
And those are also prorated at closing.
Mm-hmm.
So
I think the last thing we haven't mentioned are the lien search and title search fees, which are relatively small, but
when I do my expense sheet for our clients, when I said title fees, I kind of include those in there.
okay.
I don't really parse those out. I just kind of figure out what the approximate total amount you'll pay, and
Right.
those are like $100,
I think
$150.
150 is the average.
Yeah.
Basically, what that's the lien search is lien search. So basically, they just want to make sure that there's no liens against the property, that you own it without any issues, that you have any city or code violations and things like that you have penalties and things like that. And title search, again, make sure that you are the owner of the property, that there is no issues with title, that throughout the years any transfer of ownership has been done properly and things like that.
Yep.
And I think that covers.
Yeah, that's it. Other than those fun random, liens or whatever that can always pop up, but
Yeah.
closings are very complicated. We deal with all kinds of craziness all the time. But those are the major normal stuff that you'll come across.
Very good. Another topic, see, it's not singular.
I feel like you should have introed with topics. But, you know.
I like to keep you guessing.
We'll edit that in post. Make a note of that, videographer, please.
Okay. What is the most common type of contract, purchase contract, used today for real estate transactions?
Do you know what it is?
Yes. It's the FAR/BAR
Is there
access contract.
Okay, you give me the answer. I thought it was a test.
You asked me. I thought you were asking me to answer.
I guess I was. Yeah.
Okay.
FAR/BAR as is. So, tell me about the FAR/BAR as is, Julie.
The FAR/BAR assist is the most commonly used contract in real estate transactions today.
Okay.
Basically, what it does is it gives the buyer the ability to do their inspection within a predetermined, pre-negotiated time frame. And within that time frame, the buyer has the right to cancel for any reason. It could be because of an inspection or any other reason that they find appropriate. On the other hand, the seller is not obligated to make any repairs. That's where the as is comes. You are selling the property as is, and you're not obligated to do any repairs, and the buyer has the right and opportunity to do inspections and cancel within that time frame.
Yeah, correct.
That's the
So it's
short
important.
answer.
So everybody, it is used like 98% of the time, the FAR/BAR as is contract. It's the most common. I think probably throughout the entire state of Florida, but certainly here in our neck of the woods in South Florida. And there is a contract that exists that is just called the FAR/BAR contract. It's not as is, it's regular.
Mm-hmm.
And I think it's important to kind of contrast those two because in the FAR/BAR as is, there's the cancellation, there's the inspection period, which is like 7 to 10 to 15 days or something like that. It's negotiable. And the buyer can cancel in that period of time if they don't like the house, if they find it a condition
That's
issue.
only in this is.
That's what I said,
Right.
as is.
Mm.
Now, the regular contract, to contrast that, does not have that provision. The buyer does not have the arbitrary right to cancel the contract within the inspection period. What it states is that the buyer may conduct their inspection within a period of time, and that if they find issues that are warrantable or not of a cosmetic nature, which are to a large degree outlined in the contract, then the seller is obligated to repair those items up to a specified dollar amount. And people forget that that contract exists because the as-is is just so prevalent. Frankly, the as-is is easier because you don't have to deal with all that. It's just kind of negotiating and figuring it out.
I think sometimes sellers get anxious if they're like agreeing ahead of time that they're gonna do X amount of dollars in repairs.
Now, listen, either contract's fine. They both work out pretty well. But I will tell you that actually the as-is contract, a lot of sellers do prefer it. But it actually is weighted a little bit more in the buyer's favor because the buyer has the right to cancel. The reason that the regular contract exists is actually to benefit the seller. Because step one is you can pre-negotiate how much money you're willing to spend on repairs. And by the way, you don't have to spend that money if there are no repairs.
Right.
So if your house is in
They have
perfect
to
repair.
prove that something's not working the way that was intended to work.
Yeah.
Yeah.
If your house is in perfect repair, you don't have to make any repairs. If they find warrantable repairs that are whatever, then you'd have to make that repair. But you already know that going in. So it's not a surprise. But the best part is the buyer doesn't have the right to cancel. If the buyer finds a problem, like a leak under a sink, they can't say, I'm not buying
the
this
house
house.
anymore. Yeah.
Right? You have to make the repair, and they have to buy it. So it's actually insurance to get to have a slightly more likelihood of closing. Because in the as-is, the buyer can pull the plug within the inspection period for any reason completely. And you can't do anything about that. Anyway,
Right.
if you have any
To
questions,
consider.
yeah, I can, I tend to ramble with regard to contracts because we deal with them so much. She doesn't think so. She listens with riveted, captivated attention the entire time. But it does happen. And so, anyway, if anybody has any questions on those, it's quite complex, but we're happy to explain it. So
Very good. And last but not least, also on the seller topic, I guess today's a seller focus video. So sometimes we hear this from sellers in the market. So I want to sell quickly, and I'm thinking of offering a selling bonus to the agents to sell my house. What do you think about that strategy?
what do you think about that strategy?
It's probably not the most efficient strategy for marketing your home and selling it
Why
quickly
not?
because it's more of a fine print first you're appealing to the agent, which is not the person who's actually buying the house. So you're selling to the wrong person, I would say. You know, you're trying to convince the wrong person to buy your house. Also, the selling bonus is usually advertised as a, what do you call it, like a write-up or a, you know, like a footnote. I don't know how to describe it.
Well,
So
let
they
me
have to
explain
find
that.
it,
No,
right?
I think that's an important point. So, anyway, I'll let you finish, but I want to make sure to note that because that's important.
And I think what we're trying to appeal is to the consumer, which is the buyer, and what the buyer is most concerned with is ultimate is price, of course, condition, but in this case we're talking about money, so price. So instead of offering a bonus to the agent, wouldn't you want to consider maybe making the price more appealing so that the buyer, who's the one who's actually making the decision to purchase the home, decides to buy yours instead of your competition?
Yeah, I think that's exactly right. That's exactly right. The key is like what you're saying about the price. I want to chime in on that because, like, you know, when we're advertising, you know, we have our proprietary advertising methods, and we also utilize the big, you know, services out there, you know, like the Zillows and the Trulias and the Homes.com and all that business, right? And they don't have, you know, they have price, and they have bedrooms, bathrooms, and a couple of other metrics, and then the pictures, and that's like the major stuff that you see and you can search by. There is no footnote on, you know, bonus to the
agent.
Not even in the multiple listing service, which is the internal real estate system that we use to share and advertise properties to other brokers. There's no, they have to like read the fine print to find that out. There's no easy way to advertise that because there's no set field for it. So that's one of the reasons why it's not particularly effective is because they can't find it. And I agree with everything you said. I think you nailed it. That's exactly right. Because the challenge is ultimately we're advertising the property to people that want to buy it. And they care about the price they pay. So inflating the price by a set amount of money and offering incentive to an agent, I'd rather just see you pay an agent a fair fee, right? Not discount, but you know, pay them fair, and then reduce the price that amount. And so now you're incentivizing the buyers directly, and all of the advertising that we're putting out, or any broker, I guess we're not talking about us right now, but anybody, is more appealing to those end buyers.
Right.
So, yeah.
And also, when you think about it, if you ever look for anything online and you're looking at a long list of things, your first thing you're sorting through is through the price, right? So you would do the same thing. If you're looking at houses, let's say there's like 10 houses in that same neighborhood, you're just gonna start going by the price. So by the time you get to I'm offering a bonus to the agent, like, you know, they already looked at your 9 other competitions, you're at the bottom. If your price is not competitive for the other 9, by that time it's irrelevant. They're looking at something else. So.
Plus, nobody reads that stuff anyway.
Yeah.
That's why pictures are so important, right? I mean, how many people just look at the house, look at the price, look at the pictures, and then they move on?
They make a decision to come see it or they move on.
Not that the description has zero value, but the reality of it is, you know, a lot of times, you know, if you're not appealing to somebody quick, the first impression factor, you've probably lost them. You know, if you have to sell it in the fine print, you've got a problem. You know, so.
Okay, very good. Anything else?
That's it.
That's
okay,
it.
Those topics were
I
quite
concluded.
good. We're quite good. They were excellent. Yeah.
Okay, very good. So I think this concludes our video. And if you know anybody looking to buy or sell real estate in Palm Beach County or any county in South Florida, I guess.
Yeah.
Let us know.
Yeah, we cover a lot of counties. Yeah. All right. Well, thanks. Thanks, Pete.
Bye.
Thanks, everybody. Bye.